So here's the table of 55 companies that do match our criteria for the best growth stock currently in USA. So there's 55 companies and only 18 trade under the price to sales discount, meaning if we take the company's historical average, price to sales average, and current price to sales, and we divide it by the mean, we do get the discount. So we have 17 companies on a discount, and for example, 20th company which is still doing good sales growth is Uber, but we see it's trading over 4% of its historical price to sales. So all in all, so all of those companies are kind of the same because they matched our filtering. So 55 companies out of all of the thousands that are public in USA. So I will show what kind of criteria we're looking for, and I will give an example on Paycom Software Incorporated. So bear in mind, we show Paycom, but pretty much all of those companies, starting from Pinduoduo and Mercadolibre I saw here and over here, and all of the rest are pretty much kind of the same. So first of all, we look, we want to see that the companies are making records in sales. So every company here are making records if we talk about year over year, because we have to compare apples to apples. We cannot take the sales within 1 year. We can see we have to take into account the seasonality. So Paycom does match that. Every company is doing double digits pretty much, I think, in this on the list. So Paycom strongly over 10%, and this is the mean over last 6 quarters. So last 1.5 years, if we talk about sales year over year, every company has to be at 100%. But why we like Paycom a lot is they have never had one negative quarter. So these two graphs show that it's at 100%, not a negative quarter. Compounded annual growth rate all time, we do not see a sharp decline. There is no sharp decline, like 3% over last 4 or 5 years only. Book value, we want to see the same kind of metrics. We want to see strong steady growth. So we see they have doubled the book value since in 3-4 years, doubling. Also it's all-time high. The same case, not a single negative quarter. If you talk about book value per share, not once. Numbers are kind of the same as the sales. So we always want to smooth it out over last 1.5 years to see a bit better picture, because there can be some tips. Because 1 quarter, 3 months is just too short to make any conclusions. We want to take 6 quarters, and the last 6 quarters, the average has been almost 14%. And why PAYC is attractive buy is the price. So we are way down from the peak from 4 years ago, 3-4 years ago, even though as we saw the sales has been increasing. So during the peak, the price to sales was over 20, and now it's trading at 6.3. So 3.5 times. Pretty much the companies now. It's better, but it's trading 3.5 times less the price to sales. So it's at a big discount. And here is the percentage of the mean, and we have to bear in mind that that historical mean, it kind of fluctuates, but so it does change every quarter. We did recalculate. So the historical value now is 10.16. The historical mean currently trading at 629, meaning it's only trading at 62% of its historical fair value. So if you take the current price of PAYC 203.26, 203.26 divided by the discount, so the price target is $327. And maybe if at some point in the future we not only go back to the mean, but usually what happens if you break it, then the pendulum goes to the other way. And for example, I don't know, take any number over here, the multiplier 1.96 from the average, we could see the price reaching 642 US dollars, $342.